Hello, welcome back. Episode 31 of the Capital Spotlight podcast. Your host, the Director of Business Development at Lone Star Capital here with the one, the only two-time author, Mr. Suit Supply, Mr. New Mug, Mr. Patek Philippe, Rob Beardsley, the founder and principal of the firm. How are you today, sir?
I'm good. I'm just showing off our new Lone Star Capital Yeti mugs. Very excited
Ooh,
to have these.
sleek. Can one buy that somewhere, or do they have to reach out to us, give us their email? Do they have to invest with us? How does one come up on that if they're just a listener of the pod and whatnot?
If an investor of ours wants one, we'll definitely send one over.
Very good. No merch out here. Do we have a merch link or anything like that? Is
Nah,
there a
no,
swipe
no
up?
selling of merch.
Right. Well, we'll sell other things, of course, as we always do here on the show. Little housekeeping, NMHC right around the corner. We're starting to get a very stacked schedule. By the time this show airs, actually, it'll be a week away. So please reach out to myself or Rob to get on the calendar, but probably me because Rob doesn't do that stuff anymore. He delegates those responsibilities to myself. Raise Fest is coming up here in Phoenix. So if you are going to be attending a Raise Fest, shout out to Hunter Thompson and his group there for Raise Masters. Really great event. If you're a sponsor looking to meet equity relationships, would really recommend going. Here's the free plug out there for our boy and friend Hunter there. On top of that, we probably met with 20, 30 people last year, and it was highly productive. And we're going to level it up this year with some incredible dinners. We've got a really, frankly, a greedy week of food lineup and reservations and restaurants as we're trying to be more proactive in regards to setting up meetings and getting all of our ducks in a row to make sure that we can have the most efficient and effective process possible for these conferences. So there's that on NMHC. Reach out to me if you want to make a meeting there. Raise Fest, reach out to me if you want to connect there and get to know us better and learn about our strategy here coming up in the new year and beyond. New capital partners, if you're looking to partner with a group like Lone Star Capital, learn more about the Fund to Fund program and how you could participate working with Lone Star Capital, please reach out to myself. My email, I'll say it once more, Craig, Craig at LSCRE.com. For new partners, 1031 exchanges, anything of that nature. If you're just looking to make an LP investment and learn about our deal flow and our pipeline, reach out to myself, of course. And then real quick, just a quick San Antonio Aspire update. It's about just shy of an 18 IRR. 8% cash on cash. We have a little bit of space left, I believe, but it is running out quickly. Funding deadline is approaching. Do you have any words regarding the Aspire deal in San Antonio, Rob?
No, just looking forward to getting to the next steps there. Funding deadline, like you said, I think is what, February 6th? But we'll have funds in before then. This deal is just going on a good track. And then 10-year treasuries are in a good spot. They've been volatile, but they've been volatile in the right direction, thankfully. So right now we'd be locking in a pretty strong rate below pro forma, which is exactly what you want to hear. And yeah, looking forward to a smooth closing.
Absolutely. And I believe we've got a 6% interest rate in there. However, on the 5 year, which is, I believe, the profile we're going to elect to go on, it's about 25 basis points off if we were to rate lock today, which is so awesome. It is so nice to not have to buy points to get it down in order to get a more accretive interest rate. So love that. On to the first topic of the day, which is problem with capital raisers doing deals which pays them the most, not paying their investors most. So this is something that I've experienced a little bit more now, as there's, it's harder to raise money. So therefore, capital raisers want to make sure that they get comped out accordingly to hit their yearly goals and their overhead to hit their needs, if you will. But I'm seeing this here, and I know you've seen this for some time as well, Rob. So kind of let me know where this topic and idea lands for you, because I know we've had this conversation in depth about what we want to do. Should we kind of bend if people kind of push back on what we're offering? So would love to hear your thoughts and how you perceive this topic.
Yeah, I think you know that we're pretty passionate about this topic, given that we're sponsors and work with a lot of capital raisers, work with a lot of fund managers. And it can be frustrating because we're on the other side of things where a capital raising partner is trying to increase their margins, or they're struggling to raise capital, so they're trying to squeeze as much profit as they can from every dollar that they raise. And so that's going to bias them to partnering with sponsors that are willing to pay them the most fees and give them the biggest cut of the promote. And while as a capital raiser, obviously your intention is to look after yourself and to look after your own bottom line. But if you drill in and focus too much on compensation, that might push you into the arms of sponsors that, while they're willing to pay you more, are really not the best place for you to put your investor capital and for you and for whom to partner with. So that's my concern, is if you're over optimizing for a cut of the fees and the cut of the promote, you might not be putting yourself in the best position long term. And why that is because a sponsor who is willing to pay a capital raising partner more is likely a sponsor who is more desperate for that capital, or is in turn charging more on the underlying deal structure. So they might have a 3% plus acquisition fee, which is why they're willing to cut you a bigger piece of the fees, because they're taking a bigger cut to begin with, right? So in the end, who's getting screwed? It's the underlying investor. And that doesn't resonate with me. And it's frustrating to lose business to other sponsors who are doing just that, when I know that that capital would be better served partnering with us. And obviously, I'm extremely biased. And to a certain extent, half jokingly, I truly do believe that everyone should be investing with us. And it bothers me when people don't, because I know that we can provide them a better service than so many people out there. And so that confidence and this obsession that we have to provide the best service and product just leads to frustration on our end when we see us losing business in that regard. And when we know people are well intentioned, we know that they want to make money, they want to partner, they want to do deals, but it sucks when we see them go and do deals where we humbly don't think it's in the right direction. So that's my rant about getting enticed by bigger fees and going in the wrong direction.
Very interesting. There's a lot to pluck away from there from just the items you went through, and well said. I think you're not joking at all when you say we know that we feel confident, and I don't think anyone should want to be working with anyone who doesn't have that slight sliver of, you could call it arrogance, confidence, cockiness. They're all kind of in the same neighborhood. They're all friends with one another for sure, but I truly believe, and we put our money where our mouth is. We don't really invest outside of Lone Star stuff. We've had in-depth conversations regarding this with where we want to deploy our equity when we get bonuses, comp, and whatnot. And what do? We throw it right back in our deals because that's how much we believe in our opportunities. On top of that, one thing that I will also note and mention is you said how if you work with a group who might pay you better, well, if a group's going to pay you better more than market, that's kind of a red flag. That kind of is screaming desperation, or they're greener. That's not to say that the deal in the market could bail someone out. Frankly, we've done deals and been in situations where we got that benefit when we're probably earlier on. Now that we're such a well-oiled machine, we don't need to give, above market rate turns to get equity into our opportunities. Where obviously we want to be generous. We want everyone to get paid. And I say this all the time when I work with new partners or have, ongoing relationship calls with their partners. I want to get wealthy together. So there's a big enough pie for everyone to serve, but it's all about the investors first, frankly, and making sure that they get their rate and that they get a competitive return, obviously, in the marketplace, and that they have a good experience with us. But with that said, it is concerning that we do lose business to people who want to get, a 4%, upfront fee, or a 4.5%, whatever it may be. Also, what would be more concerning to me too, if you are working with kind of a capital raiser who's kind of a free agent, if you will, who is a mercenary who kind of partners with groups like us to raise equity, is, if you had an insight as to how their fee structure is, what would be a very big red flag to me is wanting a lot of money up front in that raise process, because then they don't really care about the performance. They're just optimizing for their, their fee on the front end. I would want to see someone who want to put their equity more towards the back end of the deal, because if a deal hits certain metrics, then everyone is getting wealthier together, and that means they actually truly believe in the deal. So I would try to understand that, if that's possible or not. If that's, too invasive of a question to ask, I understand. But I would say that is something that I would want to think about, is making sure that person has the aligned interests on the back end of the deal. On our end, I don't think we're, too aggressive with regards to our fees associated, especially in the acquisition and whatnot. But where we want to make our money is, of course, hitting above that for return threshold to make sure that everyone gets, above, market beta returns, and, can beat the stock market. So that's kind of how I look at it. Would like to turn it back to you to see if you had any thoughts from that.
A corollary to this topic is the idea of sponsor selection on the capital raising side. So we're talking about sponsor selection in regards to the fee structure and how much the capital raising partner can make. Another sponsor selection mistake I think some groups make is being a bit rigid and bureaucratic when it comes to experience and size. So there's often groups that will say, well, we only partner with sponsors that have 10 years plus experience, or 10 plus exits, or $1 billion portfolio and more. And while I think that generally bigger is better, right? If you have two sponsors standing side by side, I'd prefer to invest all else being equal, I'd prefer to invest with the bigger sponsor. However, as we know in life, it's not all else equal. Things are not equal. Things are always moving around. And so as a sponsor grows, their motivations change, their conviction changes, right? So if someone's on their first deal, their second deal, their third deal, that's going to be a really, really important endeavor for that sponsor. That's life or death. That's make or break. Because if you have a flop that early on, it's very difficult to bounce back. But if you're a big shop like GVA and you have 30,000 units and you have a couple deals that flop, you're going to survive. You're going to be just fine. So the motivations are different. The way that the operation is different at different sizes. And so I think it's a mistake when capital raisers go to just blindly go in that direction. Like I said, all else being equal, it is better to go bigger, but it's not all equal. So you need to go in and do the due diligence. And I think it's interesting because as a capital raiser, that's your job. That's how you create value. You create value through manager selection. And your skill set should be taking out the sponsor to lunch, to dinner, to drinks, and figuring out, is this emerging manager the right person to bet on? Am I going to do well? Is my capital going to be safe here? So if you go and put your money with Blackstone, what did you do that's special? You know that everything's going to be fine. That's Blackstone. It's a well-oiled machine. It's the largest private equity firm in the world. There's no magic in that. There's no skill. But how about your ability to go and identify a sponsor who's on their second deal and they only have one exit or no exits? And if you're able to pick the jockey that early in the game, the payoff is way bigger, because if you do bet on an early jockey, they're going to be much more loyal to you when they grow. They're going to pay you better. There's just a lot of benefits associated with manager selection. And I also think there's a mismatch. If you're also an emerging capital raiser and all you raise is, and I don't mean to say this pejoratively, saying all you can raise, but if you're only raising $1 million a deal, or even just
And we love that tranche level, just full disclosure.
yeah, that's a great. We love partnering with people who raise $1 million. That's our bread and butter. That's a fantastic size. But I'm just speaking across the spectrum, big universe. If you're raising less than $5 million per deal, that's still at the end of the day sub-institutional. That is small. Those are small checks in the grand scheme of things. And for you to want to play in that space where you're raising 5 million or below, and you want to go and partner with sponsors that have 10 plus exits, 10 plus years experience, $1 billion plus portfolio, that's a mismatch in my opinion. And you're not creating optimal value for your investors, because you're not going to be treated with the special care and respect that you deserve when you're with a big group like that. And so I look at Flagship Capital, JC Clemens, as a perfect example of what a middle market fund manager does. They manage a $100 million portfolio. And I know that sounds big, $100 million portfolio, but that is not big. That's talking debt and equity. They're agnostic as to which side of the cap stack they allocate to. But let's just say it's
lean. They're very lean and open-minded too, was kind of my takeaway from what JC does and how they do it. And they want to be, incredibly efficient with who they deploy money with. And he said they like the sponsors in that deal 2 to 10 range, right?
That's exactly right. Deal 2 to 10. So that they're creating a ton of value for their investors by going and sourcing sponsors that are in the deal 2 to 10. I mean, how do you even find those guys? Those are very new and they don't last forever because someone's from deal 2 to 10 and then they're 10 and beyond, right? We're already 10 and beyond. So it's a short blip in time where you find a sponsor in that sweet spot. They can go and negotiate a good deal, and that sponsor is going to eat, sleep, and breathe that deal that they're partnered on, right? Because it's their deal 2 to 10. It's so early on. That to me is the
And
magic of investing as an emerging manager, not saying, oh, well, we're very smart and sophisticated. And by that, we mean we only invest with sponsors that have $1 billion plus portfolio.
And we're really, frankly, on our end, close to that 2 to 10 range because, yes, we have 17 deals under management, but we only have gone full cycle on 2 deals, and that could be changing coming up here, of course, at any moment. Not from a forced selling perspective, but actually from other positive perspectives, which hopefully we'll be able to unpack and share more great news to our investors as the year unfolds. And real quick, just want to say this: if you are looking to place equity with the group coming up here, as Rob just mentioned, and you are trying to get wine and dined, please email me and I'll sort you out. But another thing to think about, as you said, that I thought was really interesting is, like the GVA comparison is if, you were a group that maybe had some really nice exits because you bought very aggressively, maybe drunkenly, and you rode the interest rates down and maybe on a floating rate debt or bridge profile and got rewarded for it. Well, similarly, a lot of people that grow very quickly now have all these deals that they bought in 2021 and 2022, not their 2020 and 2019 acquisitions, that they have to speak for right now and might be getting capital called. So although they may have a really, really nice profile and structure of, 30 IRR, 20 IRR, 19 IRR, 40 IRR, if you will, which is not crazy in that kind of COVID kind of cycle if you really timed it perfectly. But did you grow too quickly? Because there's some of those people now that might get capital called into oblivion with all their deals, and not one of them is safe. Maybe they've got, they clearly have the wrong debt and equity structure on the opportunity where they're no experts. They just time the market very nicely, right? So there are those situations there. So did you go too quickly? And I think interesting enough for Lone Star, I think you and Kent wanted to get the nucleus of the company going correctly. I mean, we're still hiring people internally right now to make sure that our flow is better with our controller now, which is coming up, which is very exciting. I don't know if you announced that. I don't know if I just spilled the tea there. We can get into that, of course, but hiring out more infrastructure-esque hires as opposed to grow, 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 grow. And now we can't take care of what's in-house because, we've scaled too quickly and our asset management team and property management team can't keep up with the new units going online and the construction side and the operations, if you will, there. So growing too quickly, I think if you're a fund manager and whatnot, to really be critical and ask if you're looking to work with a new partner, if, hey, yeah, I see your track record's there, but track record right now on, a couple of deals is not as important as what the heck did you just buy before? Because if you're internally so focused on those deals that, you're really going to kind of put your new acquisitions on the back burner, that's something that's really important to think about. I can't stress that enough. And to your point as well, we've heard, no, maybe you haven't gone full cycle on enough deals. I'm like, well, you're investing with groups and given equity groups who are literally in a substantially worse position than us. If you actually look deal per deal, dollar for dollar, where that's going to look. So it's a little bit frustrating on our end, but this is the excitement of where we are currently, where we really get to earn our stripes and show our expertise and be able to navigate this. Once we go through the recession, I truly believe that raising equity will become 2 times easier, not to mention that every dollar will feel, a lot easier to come in after this kind of looming recession, which seemingly, as you mentioned before, dun, 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 is coming soon. So I just said a lot. I would love to hear your counterpoints to what I just said.
No counterpoints. I just want to put a stamp on it and just let people know that the time is now and don't miss the boat. Don't miss that opportunity. Don't wait for Lone Star to be 10 years old instead of 6 years old and say, okay, well, now that they're 10 years old and now that they have $1 billion portfolio, now it's time to invest with Lone Star. The time is now. The time to build the relationship and grow together is now. That's it's not like we're gonna to caveat that, it's not like we're going to grow in 4 years to a level where we're going to be too big to want to talk to people and become all of a sudden kind of
Too cool.
too cool for school. That's definitely not the case, but
No.
there is a difference. There's going to be a difference between the the familiarity and the closeness of the relationships that we built. I mean, it. You can look back at the relationships of people that have invested with us from very early on, and it's a different relationship, and they get frankly special privileges. And so I think those special privileges are going to continue to burn off and become more rare. And then walking in the door later and trying to get them is going to become impossible.
Absolutely. And it's not like we have no track record here. There's not a, viable company here that you're going in. This is that you're not taking a massive feeler or kind of a shot in the dark by working with us. This is something we take very seriously and something that we're really doing well at the moment. I can humbly brag about us there on that regard. With that said, just be very conscientious of the fees there. And yes, you might get a little higher fee from your capital raise, but then it's almost certain that these people, by these people I mean sponsors, are gonna add a fee here and there on the backside that will only come out of your and your investor's pocket ultimately. So if everyone raises their fees, no one's really actually making that much more on that deal level. So
Yeah,
interesting stuff there.
yeah, there's no magic to it. If as a capital raiser, if you're able to get paid more, that means the sponsor's getting paid somewhere else as well, most likely. Or you're able to get paid more by virtue of the sponsor being desperate, and now you're taking manager risk, which again, when there's risk, there's reward. So I'm not saying all risk is bad, but I think we've covered this topic sufficiently.
Absolutely. And just be conscientious of the underwriting and the inputs in there to make sure that you're actually getting into a good deal, not just a deal that pays you well. If you are, in fact, a capital partner, and if you're a capital partner looking to reach out and work with Lone Star Capital, call to action, email me, my email. On to hiring, which is a very interesting topic. I'm the product of one of the sides of hiring, but would love to know how you view hiring at Lone Star Capital, what that process looks like. No, we're not hiring for any positions right now, so don't email myself. We've had a very peculiar situation where someone is sending weird messages to us at wee hours of the night trying to get a job. You will not get hired that way. And also don't email me looking for a job because we have nothing to hire. But onto the hiring subject. Love to hear your thoughts.
Yeah, I didn't know we were going to talk about this, and I'm not sure what the topic is exactly, but you had spilled the beans that we have hired a controller, so super excited about that. At some point, we perhaps will have to have him on the show. Maybe when you're in town coming up here, we'll do an in-person podcast, and hopefully we'll get the podcast studio ready. Shout out to Weston. Weston, please come to New York. Hurry up and get our podcast studio ready. So yeah, really excited about that hire. That's going to be a big level up for us internally. It is also going to buy back some of Kent's time, a good portion of Kent's time, and some of my time as well, and just make us more effective as leaders because we will have basically 2020 vision when it comes to our financials and our budgeting and forecasting. And that's going to make, like I said, us more effective leaders. We're going to be able to see around corners, understand what's going on inside of our business on a more granular level, on a more timely level, because with our in-house accounting now, which is effective as just a couple weeks, and the controller, we will have more accurate financials that we'll be able to see in real time and faster. So instead of waiting 3 weeks for the financials to be prepared, it'll be 2 weeks. And that savings right there will make us just more efficient and be able to turn around and report out to investors faster as well, which that is a pain point for investors across the board, everywhere you go, not just with us. I mean, we strive to report on time, but even with us, I think we do a decent job, but we will certainly do a better job moving forward. But it's really important to investors to get their reports out on time, consistently, and that goes along with distributions as well. We've made the commitment to making monthly distributions, which I think is a genius commitment. I don't think it's more hassle than it's worth. It's absolutely worth the hassle. But that means every single month we have to make distributions, and investors are trained for it.
Expecting it too.
They're
And
expecting it.
we've trained them to expect it, and we've trained our partners to expect very highly of us. So we've set an incredible standard. If you're looking for a reference list, we can get it over to you and they can speak on it. But we've set ourselves up in a position where we really need to perform and to keep leveling up, which is fun to hold ourselves that accountable.
Yeah. So
So
go ahead.
yeah, I was curious to know if you could fill us in with regards to the controller space, what that actually means, because still to me it's slightly unclear, or was until you've explained it. But For those who don't know, can you explain what it is, why the value is there, and also when a firm like, Lone Star Capital, if you will, someone similar to us would actually need to bring on a role like that in their business to kind of free up some of the bottlenecking. So I'd be very curious to hear your perspectives on that from kind of an inside business running perspective, not just a real estate perspective.
Yeah, a controller is a key function within an accounting and finance department. So if you have the accountants that are actually doing the day to day, then you have the controller that is their boss, basically. And then the controller reports up to a CFO. So that's the hierarchy. So basically, a controller is being one step below from CFO. A controller is more of like a day-to-day manager of the accounting and finance function. And then, of course, CFO plays more of a strategy role. So in a small company like ours, hiring a full-blown CFO is way unnecessary. So hiring a controller is a really great happy medium, and asking that controller to step up and play CFO at times when needed. And then also sometimes that controller needs to take a step down and do some more remedial tasks that would be more of an accountant's job. And so given that we're a small team, everyone wears a lot of hats. We're all humble. Sometimes we're doing glamorous jobs. Sometimes we have to go down and get our hands dirty and do lower end jobs. And so we explain to our controller that they're going to be running a spectrum of responsibilities, both in breadth and depth. So that is on a basic level, they're going to be paying the office rent, which needs to be managed and paid every month. That's very basic. But then at the highest level, there's going to be building out projects of revamping our accounting process, where we go from accounting to asset management to reporting, and that whole chain of events. And we have some other projects like potentially bring HR in house and trying to think of some other things. But yeah, we're going to be systematically addressing. I think I talked about this recently on the show, but we'll be systematically addressing different functions across kind of the operations, accounting, finance functions that we have, and just cleaning things up, getting more organized, and step by step repairing things or breaking them and rebuilding them. And because I was actually just on Ken's podcast, the Lead God podcast,
Shout out to
on
our boy
Friday.
Ken. We're gonna see you in Newport soon. I'm stoked. Could not be more excited to meet you. Just it gets me fired up.
Yeah,
Yes.
it was a really good podcast. I really enjoyed it. I actually hadn't done a guest podcast show in quite a while. I know you've been taking over for us and going on a bit of a podcast tour, so thank you for that. But that was my first time being a guest in a while, and we had a great conversation because he's a high-level entrepreneur. So we kind of talked about mindset as well as some practical strategic things that a business owner has to think about as they're scaling a company. And these sorts of topics and ideas came up, which I appreciate. And one thing Ken said was, when you're growing, you can't build your team and your systems for your size. So right now we're at a $500 million portfolio. Well, it's nonsensical for us to build a process and team that's capable of handling a $500 million portfolio. We need to build a team and process for at a billion, 2 billion, right? So that way we can grow into ourselves and grow into what we're going to be. So that way we're not always one step behind and just falling behind on the conveyor belt.
Absolutely. And it's very interesting. I look at this, and you mentioned one thing before I get into my next thought, which is at Lone Star, we really are not afraid to get our hands dirty. I will do everything from talking to, billion-dollar funds legitimately with you and setting that up and coordinating what they're looking for and kind of filing that away. And then I will also be helping Dasha doing silly little setup stuff before our event, getting my hands dirty, taking a steamer and ironing out a banner or whatever it may be to get everything set up. So that's one thing I do actually love about Lone Star is because it does feel, although very built out, it almost feels scrappy in some senses where no one feels like they're above the job or above the role. And I kind of like this of getting my hands dirty and making everyone's life easier. And a big thing I will say is I feel like a lot of my roles and responsibilities are to free you up, to not have you have to think at all about solving for the equity equation, where you can just think about ways to double the revenue. Well, similarly, if you can get Craig to Kent, I don't know if that's the same similarity, but to free his hours up so he doesn't think about some of these smaller stuff that kind of are a little bit more remedial or just don't really seem necessary for where we're at for Kent to do anymore. If we could have our two heads who are as brilliant as you two freed up, and I can free you up, and similarly, Mr. Cohen can free Kent up. That would be so incredible. Just because if we could have two people who are worrying about doubling the revenue, think about where we can go. And just with Kent, how brilliant he is, how quickly he's a speed reader, can read through all these legislations, find the next kind of alpha investment strategy, whatever it may be. It gets me really juiced up because if we can free him up and we can free you up, we are golden and we are running. And one thing I'm going to do is try to make sure you don't have to go to these conferences because I can hold it down so well. And, you can just be more comfortable, more at home and, apply your brain to thoughts like you did today, this morning of, ways to get better on a conference. It gets me juiced up just thinking about developing business like that. And as the director of business development, that gets me very excited. So, I just think about this. If you need me to literally do dry cleaning for you, because that's what the job is to get you done, I will do that. If you need me to set up a, $500 million fund conversation with regards to a sovereign wealth fund or REIT or whatever it may be, it gets me excited.
Well, luckily we have Hannah for dry cleaning now. So shout out to Hannah. She's doing a fantastic job. But yes, you're totally right. I'm super fired up about everything you just said. That gets me really excited with the idea about Kent getting more freed up and not being mired in things that frankly just don't create that much value, because he is way too valuable to be caught up in that kind of stuff. And he's just a hard worker. So even though he's busy with everything, he's still creative and scrappy, and he's jumping on these calls and figuring out. He's got some new strategies that he's cooking up right now, and yeah, we might be rolling some things out soon. But yeah, usually I'm the one that's young and ambitious and pushing him, saying, "Well, we need another strategy. We need to do this. Let's add this on." But right now, he's the one that's pushing me and saying, "All right, well, I've got this idea and we can make this work, and I think there's alpha here." And I'm kind of thinking, I'm pushing back on him, saying, "Well, what we have is working. Let's not grow too quickly." So it's always really nice to have a nice balance like Kent and I do, and like you and I do in different ways as well.
Yeah, and even if Kent wasn't using these hours back to working, because I don't know how much more he could theoretically work, it would make me happy to know that he's more freed up to enjoying time with his wife and his family. I mean, he's got what, four kids, right? Or
Three.
maybe five? Three, oh, three, okay, excuse me. He's got three kids. He's a family man, naturally. So even the idea of giving him 2 to 3 to 4 hours extra a week where he could spend time with his kids and his wife gets me excited just because that will make him happier. If he's happier, the firm will do better,
Yes.
so on and so forth. If I can make your life better, if I could take X amount of hours back out of your week to make you happier, I know everyone benefits from that process. And that's what I love about Lone Star. It really is a mindset of a team effort and making sure that people are happy. Just not that we need to give ourselves more ads. I've never felt more valued or appreciated, or my thoughts have been more taken seriously. Not that that wasn't the issue before, but I really do feel as if everyone's impact is felt and ideas are heard and listened and implemented at Lone Star. And we just really want to get it right and put the best ideas forward and experiment. So it just gets me excited knowing that he gets support and help there, and that we're growing the firm in that direction. And we all have a chance to level up here and get better. And it'll only help you, the investor, the capital raiser, you name it, having someone like that in there to make our process and functions even that much better. And I think the biggest takeaway that I had from the Lone Star Conference, the first one I went to, which was our second annual conference, which was not at the World Trade, but whatever that event center was in FIDI. At any rate, it was very clear to me at that point that the nucleus of the company was built out very well. But now adding all the extra players like Jason Robbins, who's the works with Josh and Kent, and then of course adding the new controller here just really builds it out more. We're just more robust than ever, and it's just exciting as we emerge into some new markets, and we're in a time where everyone is shrinking, expanding, and hiring, feeding more people. You should feel very proud of yourself, you and Ken, obviously. And it really is cool. We had this conversation the other day, which was, it's not that you're just making money for yourself. I've made money for myself being, an independent contractor, and that feels cool. But I imagine on your end, it must feel very special and empowering to have employees where you're taking care of them as well as you guys do, because believe me, you do take care of your employees. I can speak to that and rave about that, but also hiring when people are shrinking. So very cool stuff there. And then also just the other note I had too, just this is an outside hire, but you have at Lone Star had, hiring, kind of from friends, family, inside people, if you will, not the most historical. We've gone very wide with the process, but then it's kind of been back to the grassroots, right? So if you want to just touch on that real briefly before we get to the next topic, that would be cool.
Yeah, I'm glad you brought that up. So it's a funny story how seemingly every time we have a new hiring need, we go out, we put together a job description, and we'll pay $2,000 for a national posting on select leaders. We'll post on Indeed, we'll post on LinkedIn, and we'll get a ton of resumes. We'll pull in over 100 resumes. We'll have a bunch of Zoom interviews, we'll have in-person interviews. So we conduct a
I'll
full
get I'll get messaged and spammed on LinkedIn, even though
Very,
I'm not
that's
the
very
decision
critical.
maker.
Yes,
Yeah.
absolutely. Yes. And we will conduct a full process, but at the end of the day, every time we end up hiring somebody within our network. It comes through a friend referral or a professional referral. So, for example, we like you brought up Jason Robbins, for example, he ended up coming to us from another firm that actually invested with us. So we have prior experience and he already was very familiar with Lone Star. That was a great fit. And since he had extremely relevant experience, it was very plug and play on many fronts. So that was fantastic. Brad Oliver, our director of acquisitions, you and I are friends with his older brother, Taylor Oliver. They're from the Bay Area, which is my favorite place to hire from. Our hometown is just seemingly full of talent.
Brad and I and Taylor were all on the same Little League team together. Okay. So that shows how long these relationships and roots go. I've known the Oliver family for more of my life than I haven't, for perspective.
It's incredible. Obviously, Dasha being my sister, that's fantastic. That was not a traditional hire. And then finally, jumping out, well, you, of course, we were best friends prior to you joining the company, which is huge and is a super awesome dynamic. And then leading up to now with the controller, hiring Mr. Cohen, as you said. So he came through a professional referral from Kent. Kent went to law school with I forget the guy's name, but he had a friend at law school that went to an accounting firm and he was Mr. Cohen's boss. Had intimate experience working with Daniel and said fantastic things. And that means a lot to us. And so that's a really cool connection where going all the way back to Kent's law school days, being able to track these referrals and relationships and then lead it all the way back to now really fortifying and adding robustness to the team. So super exciting stuff. Love the way that we do hire. I think it's a great way to keep ourselves honest because if we were just to go around to our friends and family and hire people, that would be perhaps pure nepotism, which again, I don't think there's anything wrong with nepotism. You want your business to be reflective of a family. But by having a formal hiring process, we keep ourselves honest. We know what the talent is out there. So even though we're looking at the referral and the friends and family potential hires, we're comparing them against true people that are coming through not true, but just everyday applicants coming through the door as well. So I think that is a fantastic hiring process, and so far it's worked out really well.
Yeah, interesting there. And I think there's certain jobs where the nepotism route or the I know this person would do well role makes a lot of sense. And then similarly, I think there's also other positions where it would make sense to kind of go with the more traditional route, which is kind of post a job link to attract some of the best and brightest that, the whole Manhattan kind of vicinity could bring in, or, maybe someone who's from, Chicago or South Florida or Los Angeles, if they're looking to make a move over, could be interested in, right? But with that said, it seems as if with the fit and the pedigree that he has, we weren't probably going to find that from a nepotism hire, which is really cool. So he is the real deal from his background. I don't know if you want to share his experience before, just to kind of give an angle into the pedigree, but very, very cool background, what he can bring to the table, and will help us only establish more legitimacy and kind of brain drain some of the big firms that have been successful, right?
Yeah. Yeah, cool. No, let's move on.
Okay. With that said, kind of an interesting subject. We're obviously in Texas for many reasons. One of the reasons is it's a lot more pro-business. So it seems as if not that California is not going to do bad overall. It obviously is geographically incredibly blessed, having Mediterranean weather, frankly, throughout the state. Obviously, close proximity to Mexico, which is a big trade partner. It's the gateway to the east if you're coming from Asia over to California. Naturally, the technology hub of the world is based in California. It's one of the biggest economies, but there was a massive surplus of equity. Now there is a massive debt that state is running. In addition to that, it was just some news I think your dad shared with us that California now will be giving benefits to illegals, which, not to make this political, this is not a political show at all, but this will have some negative, I think, impacts on investing in California, which will only help, I believe, states like Florida, but more than Florida, just because obviously Florida, with the Cuban influence there, they do not like socialism and they do not like communism at all. So I think that'll only help a state like Florida, Texas, Arizona, and Tennessee. But as it pertains to Texas, how does this make you feel about our markets more? Do you think this will have any effect with regards to cap rates getting more compressed because investors are going to be more friendly there? How do you think this affects California with regards to a long-term impact on investments there? Kind of give me how you perceive changes like this happening.
Well, let's just analyze things in order. So first of all, if California is going to give uh, illegal migrants health care, that's going to incentivize them to come to California. So if you own workforce housing, demand is going to go up for your workforce housing. So that's a good thing. But what's the bad part about it is people are getting fed up with California's politics and policies like this. So a lot of capital and a lot of their tax base is leaving, and they're going to Arizona, they're going to Texas, they're going to Florida.
South Lake Tahoe, Nevada side.
Sure. And that is obviously negative for demand overall, not directly when we're talking about multifamily tenants, but it's negative for just the economic engine of California. So I'm not an economist, I'm not an expert in California, so I'll leave it at that. But I don't know if this is necessarily, yeah, I think it's going to just basically exacerbate the existing trends. When we talk about the COVID trends, like everybody moving from the coast to more affordable cities and states, that was already happening before COVID. COVID just exacerbated the trend. There was already this flight to cheaper cities. And this is just another example of pouring more fuel on that fire. These are long-term trends. The Sun Belt play has been a long-running play, and it's going to continue. These long-running momentum plays don't turn on a dime. And I know some people think that the Midwest is where it's at right now, and they think that the Sun Belt is played out. I don't agree. These trends are long running trends, and the Sun Belt has a ton of legs. I do think that if we want to pick on Phoenix a little bit, I think that the pricing there has achieved a bit of parity between California to Arizona. So that differentiation in costs where people were fleeing California to go to a much cheaper place. Now that Phoenix has appreciated and gotten more expensive, now there's less of that incentive to run from California and go to Arizona. So yeah, so eventually these trends can kind of get saturated and slow down. But with that being said, Phoenix still is going to be fantastic for many years to come and probably decades to come.
Absolutely. Well, just trying to think with Phoenix, how long will it take for that all to be absorbed? Additionally, with absorption, I'd be curious to know where the tax base plays is, if it helps net migration to the state, because for the first time, more people left California than came in, which was rare. But I'd be curious to know if more people come, but a lot of people, frankly, like my parents, who I remember in 2016, 2017, they're like, I will never, and my parents, full disclosure, typically lean a little bit more right than left. Leave it at that. They're like, I will never invest in California and moving forward. The policies are just a little bit nuts. I've seen this move too much. I've made my money in my California real estate. I will not be doing it moving forward. So I'd be curious to know if this alienates more people or cuspy to leave, which is part of their tax base, and also their twilight years, retirement years, which is a nice, customer to have in your state. If you want to look at it from that perspective, who feel more alienated, well, they're like, okay, well, I want to just move to Oregon. And then if, I pop out kids, maybe they would, have a place in Arizona and make that their residence where it's, cheaper across the board for their, their utilities, right? Whatever it may be for their cost of living, insurances and stuff. So be curious to know how that has as an effect long term, but kind of an interesting subject and definitely something to note as that regards to Texas. And it just kind of does help, I would say, tailwinds for, the Arizona, Texas, Tennessee, and Florida story, as opposed to headwinds, which California may be receiving. But you did actually bring up a very interesting point there, that if more people move there, well, maybe if you are in the workforce space, that's helpful. Who knows if rent control is a player there or not, but definitely an interesting premise. On to a more fun and less polarizing subject. You and I are now legitimately, as this is recorded today, now a release. This will be a week from today, which will be the 22nd. But you and I are halfway through dry January thus far. Not that we're, big booze bags and, love to go out and burn both ends of the candle and drink it up and live it up all night. But I will say it's been incredible getting more work done on the weekends, feeling fresh, waking up Saturday morning to working out. You play pickleball, I go to my gym, I go for a hike, I do this, I do that. It really just been work, 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 because January is such a crazy month for me with 4 events in this month from a conference perspective. But it's felt awesome. I feel healthy. I feel fresh. Would love to know kind of your takeaways through this month as well, as I definitely think January is the most throwaway month of the year from just a socialization perspective.
Yeah, it's been great. Dry January has been awesome. I've been working out all the time, playing more pickleball. I'm actually joining a development league, which starts on Thursday, which is going to be super cool. I can't wait I just want to be better at pickleball. I hate losing. And this,
I'm not looking forward to you absolutely waxing me when I play
oh,
next in Phoenix, because I feel like it was cuspy where I could be competitive. Maybe if we're playing twos, I look a little bit better, but 1v1, I don't think this is going to be a game anymore, which is scary for me. So I guess I'll have to take you out the golf course to boost up my self-esteem.
yeah, I played pretty well yesterday, frankly. It was starting to click watching some YouTube videos, but this development league is going to be great. I was talking to my dad about this. If you want to get better, you have to drill more than you play. That's just the cold hard facts, and that's true for anything. And it's so tempting when you golf, you just want to hit the course and tee off. And with pickleball, it's like, well, let's just play. But you need to put in the work to do the drills, to really actually look and see where your mistakes and I know that my backhand needs work and I need to
You
just
probably
sit
need to
there and
chart it.
I
Yeah.
need to do the unfun things and I need to drill it and I need to get better because in the end it'll be much more fun and fulfilling.
Yeah, you probably need to chart it as well. I mean, if you get like a high level statistics person, figuring out where you lose points or where you kind of are throwing it away. Similarly in golf, just as an analogy, the best way to get good at golf is if you play, how many fairways did you hit in regulation? How many greens did you hit in regulation? How many putts did you have? How many chips did you have? How many shots did you go away? If you track how many fairways you hit in regulation, GIR, greens in regulation, fairways you've hit, your putting and chipping, you're going to know very quickly what you need to work on. So if you get those stats there, you can figure out very quick. And, back to that point, golf is, yeah, no one wants to sit there and putt for an hour, but you should really be focused more on inside 80 yards, 70 yards than the long game and whatnot. Naturally, it's fun and sexy to hit, stripes with your 4-iron and your 3 woods and your driver. Obviously, a drive for show, putt for dough. But similarly with the analogy there, if you could chart that and figure that out, that will only expedite, as you said, ad nauseum to me, what is not measured or tracked can't grow, I think, believe is something like that.
What is
So
measured can be managed, I think is the technical one, but I usually say what is measured expands or what is measured grows. Yeah.
yeah, you understand what we're trying to get at here, but nonetheless, it'd be very cool for you to kind of get very analytical and into the nitty gritty about that. If you can put together Excel spreadsheets that are comprehensive to acquire $50 million assets, I think you can also figure out where your shortcomings are in your pickable abilities and endeavors.
Yeah. So anyway, not too much to report on dry January. I didn't drink hardly at all in December either, but it's a kind of a fun thing to do. There's camaraderie in it since we're doing it with a few other people. And yeah, I think it's great.
Can I tell you a really big takeaway I've also had?
Sure.
I do not miss going out and drinking and doing any of that right now. Obviously, not that was, ever was a problem or anything like that, or it consumed my life. I've kind of always, just due to my career history, had to work weekends, and I always, I mean, I was calling you, asking you questions. I worked all weekend. I kind of got shorthanded here with an event coming up. I am in Laguna. Hopefully, I can go report back on the following show and say it was a great event. But with that said, I don't miss that at all. And it's really nice even when you go to dinner and yeah, maybe you have a cocktail here and there. It's like you just don't need it. There's just no point for it. It can be avoided. It's not necessary. And I went to the best restaurant in Phoenix for my money, not even happy hour, but at Buck and Ryder. I took my girlfriend out and it was $100 with tip, all said and done, no alcohol there. And we feasted, oysters, scallops, the whole nine. We had it. So it just goes to show not only is it more beneficial for our bodies, our minds, but also for our wallets too. So many positive effects when you cut that out, or at least really limit it. Not to say I'm not gonna never drink again, of course, but it is something to know and to be conscientious of and mindful and intentional about as the year progresses.
It is tempting. I've had that thought a couple times thinking, wow, should I just keep this up? Should I just not drink ever?
It's
Because
probably addicting.
I
I think it
didn't,
is. Yeah.
yeah, I didn't drink. The first time I drank, I was 19. So I went through all of high school without drinking. And I assure you, I was one of the cool kids. So I wasn't just sitting at home not drinking. I was out and about. I was
Nerd.
captain of the football team, going to parties, hanging out, having a social life, but never once drank. And it was a fantastic experience. And it just makes me feel like, okay, well, I did it before. I used to do it that way. Should I go back? It's somewhat tempting. It just feels like thinking about drinking now feels wrong.
Feels taxing. It feels actually really inconvenient, and it feels like I'm not going to enjoy my next day as much and get the deliverables I want to get done right now, which is to hit my health and fitness goal, which is to maintain under a certain weight. It's so easy to do that when drinking is not in the equation, at least for me, because I am more prone to packing on pounds. And I really am putting the foot on the accelerator if I couple some of my greedier eating tendencies with my, couple cocktails here and there. So it's something to be mindful of. Although I will say my parents are wine snobs, therefore they've kind of given me a little bit of that bug. I can't say I'm a sommelier by any means, but it is really nice to have a glass of wine here and there with some dinner, you name it, or a cocktail, depending upon how it pairs with the food, is nice. But as you mentioned, it is something to be conscientious of. I mean, Trevor Lovelace, shout out for a boy, he's doing 75 hard right now. I got a lot of friends that are seemingly doing that, and it's kind of interesting. There definitely seems to be a contingent of the 20, call it 26, that's where you are. So I'll just add your age, 26 to 35-year-olds who are, the millennials or maybe late Gen Z that are like, wait, drinking's kind of a clog and a productivity sludge and a negative effect into my life that I kind of want to take out. It seems like that there's a lot of trends heading in that direction right now, more so than ever before, at least what I've noticed. I'd be curious to know if you note that too. Maybe you're not where I'm at necessarily as I'm a couple of years older, but a lot of the hyper successful people I know are really into the 75 hard Andy Frisella stuff. They're really into kind of just health and wellness and mindfulness. And I definitely think there's obviously people are drinking more than ever. Alcohol sales is a very, very solid business to be in, as booze is not going to be stopped being bought and sold anytime soon. But it definitely feels like there's a lot of people who are not interested in that kind of section of life.
Well, I'll tell you on my end, what I've noticed is my dessert intake is way higher. I used to never have dessert with dinner, and now the dessert menu comes, and we're getting dessert all the time.
Like your Teddy and Fantino. Yeah.
Yeah, I mean, it used to be such a rare occurrence to have dessert with dinner at the end of dinner, and now it's a courtesy at this point. It's crazy.
Well, you know why?
Well, yeah, because you swap out the sugar from the alcohol, and now your body's craving sugar elsewhere, and so that's been the treat. And I wonder, yeah, dry
It's healthier.
January, not doing sweets, like going
That's
sober
Whole
on
30.
no
Yeah, Whole
sweets
30.
for a month.
That'd be called, there's a diet fab that was more of a fab before, I think like 75 hard and whatnot, but it was called Whole 30. If you're familiar with that, which is no refined sugars, anything like that. So that would be nice, but I think that would, you know, I don't think you need to cut out sweets. You have a perpetual six pack, unlike me over here. But it is definitely important to note that. But I do think generally if you would swap booze for sweets, I think it's probably healthier in your body to have sweets than it is to have alcohol for many reasons. Um, I've definitely had committed sugar side and over ate sweets the next day, been able to work out no problem. If I maybe have a drink or two extra from the night before, I'm in bed or I'm a slug of a person. So you can recover a lot easier from the sweets, although
Yeah.
both of them don't have positive effects long term in excess.
It's a good trade-off. I would definitely agree, but definitely it's sugar is just horrible. So yeah, cutting down on sweets, I think is the next play.
Yeah. Well, on to something also fun that's near dear to our hearts is suit supply, of course. So we like to look sharp. There's, of course, an office dress code. And I've told Rob this, but I had somewhere between probably mid four figures on improvement to my wardrobe that need to be taken care of. And I definitely chipped away with my acquisitions over the weekend. My brother's getting married, so we needed to get a new suit, my siblings and I, for that. So for Christmas, my mom nicely got me that. So I got a new suit there. And then I also went crazy and I got an extra custom dress shirt because my neck, according to someone on this podcast, was always too loose. So I got a custom dress shirt to fit my broad chest with my skinnier neck. Good proportions there, just saying. I got a couple of ties and then the suits, but would love just to go through once more the suit kind of sartorial or
Sartorial.
sartorial overview. Maybe we can show, if you want to pull up suit supply, I could show you what I got and what we recommend. But this is obviously something that's, like watch talk. This is our cloth talk or suit supply talk. Just to go through that is fun.
Yeah, well, a couple things. I think it's very cute that you're not embarrassed to admit that your mommy got you a suit for Christmas. That's very cute.
My mommy
But
did. Yes. I love
yes,
you, Lindy. I love you, mom.
yep,
Yeah.
that's very nice. My mom hasn't got she hasn't got me a suit in years, maybe if ever. I would love a
Yeah.
suit. Well, actually, I'm all good. I'm all good on suits. I'm very
Yeah.
person to gift for because I'm blessed and I have everything and want nothing, and also I have a very minimalist wardrobe.
I,
So
I
even though
actually I don't even know what the first thing I could even get you because it would actually the only thing to get you, which is the coolest thing, it would be experience, which would be like I want to take you to somewhere special or to spend money in that regard or a hotel experience. You're more experienced. You are maybe the least materialistic, which is ironic because we love our nice products and whatnot. But you truly are like not a materialistic person at all because you literally are trying to throw away stuff when you have nothing to even make room for, which is so
yeah,
funny.
I got home from dinner last night and I told my mom, I said, "Oh, well, let's organize my bathroom. I got some things to throw away. I got some giveaways. Oh, let's go into my shelves." And I'm more dialed in right now than I have ever been dialed in. I am so dialed in. I have nothing that's just kind of in the nooks and crannies, and everything I need I have, and if I don't need it, it's in the trash.
You should change your Instagram handle to Rob Two Dialed.
Rob too dialed. Okay, so on the sartorial discussion here, I know we kind of
Should we pull up?
attempted.
Should we
No,
pull
I'm
up
too
Suit Supply
lazy. I'm
website?
too
Let's
lazy
go.
to pull up Suit Supply. Suit Supply's website has way too many suits. That's the thing. Here's the thing. I love Suit Supply to death. They're the best company, and it's the best way for a man to look good, bar none. But even they are not victims. They're criminals in this problem against the consumer, and that is they have too many options and they change all their suits by the season. And obviously they do that because they want you to buy a lot of suits and they want you to spend a lot of money with them. If a company came out and said, "All right, everybody, our goal is to make a lot of money, but what we're going to tell you actually is that all you need is four suits for the rest of your life." Well, that company's not going to do well. So instead, Suit Supply comes out with the fall collection and they've got a purple suit and they've got this plaid and they've got this and that. It's nonsense. And so I don't want to pull up the website because they have all way too many suits. So the reality is we tried to talk about this before and it was difficult. We got sidetracked, but really quick, it's just this simple. What you need is a navy suit. And when you go to the store and you ask for a navy suit, the salesman's going to try to get you to get something crazy like super wide lapel or super skinny lapel because that happens to be in fashion. Well, guess what? It's going to go out of fashion. And then now your suit's going to be no good. So instead, get a classic lapel, get a classic two button. The pants,
Also,
keep them
po-
classic.
pockets. When you want to have pockets, show your pocket, please, because there's so many options on pockets. We want to make sure you actually have a real flap because that can also get tucked in as well. So it's versatile. But the other way, if you buy a suit that doesn't have it like that, it's not as formal. It's not the right setup. So you get the versatile look in that regard there. And, it was very interesting. But if someone wanted to start their suit wardrobe, I know it's like a soup one something that there's the bird's eye. You know this cold at this point as you've spent, as you said, thousands of dollars. So I don't have to make that same, mistake, if you will, not mistake, but learning. You've expedited my learning curve, right? So if you could explain that maybe the exact one, so people can pull up the
Yeah.
right reference number when you get there, that would be very tangible and useful.
Yeah. So you want a dark navy, and you want it to be a classic wool. Don't go for the crazy. They might you might walk into the store and it's winter right now, so they might say, "Oh, we have this beautiful wool cashmere flannel, circular wool, and it's for the winter." No, you don't want that. You want an all season suit because you want to buy this suit and wear it for the rest of your life, and you want to be able to wear it every day. And so you need the dark navy. You need a charcoal gray like what I'm wearing now. No, this is not black. The only time you wear black is for a wedding or for a funeral. So
And actually, I don't think you want to get black because my information that, or I guess the experience I had, you get a very midnight navy that actually is more versatile than a black suit.
yeah, I like that as well. I don't like the idea of getting just a black suit that I can only wear for a funeral. That's not ideal. I would probably just wear this, but hopefully I'm not going to any funerals anytime soon or ever. So anyhow, that's your first two. You've got your dark navy and you've got your uh, you've got your charcoal gray, and that's your base. And you could live on those two suits if you don't wear a suit every day for the rest of your life. That's it. Don't go crazy. Don't go for the stripes and the checks and the window panes and the chalks. Yes, I am a big fan of pinstripes, and we can go there, but for your first two suits, you should not get a pinstripe. It's too memorable.
With that said, exactly, if you've got a charcoal, like a dark charcoal, and a nice navy with a white dress shirt, a blue dress shirt, and five ties, you probably have like 40 iterations, or not 40, but 20 iterations you can kind of work off of to kind of change your look up, which is very nice. From you could do this shirt, that shirt, boom, 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 which is really nice. And to your point on the pinstripe conversation, even I'm too scared to go pinstripe because I just built out my arsenal. Just for reference, I have the very nice navy suit, as you alluded to, as a staple. It's probably your first one. I have a nice charcoal, but my brother's wedding suit will be something that's very useful as it's a darker charcoal than what I currently have. So my charcoals are built out. And then I actually got a lighter navy. It's a bird's eye. It's a different pattern. It'll travel very nicely. So these are four that, as you mentioned, I don't really need another suit. Where I'll go next is the sport coat conversation, which is a little more creative. That's probably the next iteration of my style. But just so you know, pinstripe would be, I even think at this point, would I want to have a midnight navy? Do I want that? My heart tells me I would want a midnight navy before, but I would probably go pinstripe and then midnight navy in my order of suit acquisitions there.
Yeah, so you have two blues, you have two grays with four suits. That's it. You don't need any more suits for the rest of your life. Obviously, need is a very subjective term, but seriously, if you had to be in a suit and tie Monday through Friday, four suits is plenty. Seriously, that's all you need for those people that think that you can only wear a suit once and then have to dry clean it or change it out or anything like that. Suits are really fantastic. Wool is a great material that holds its shape. And if you buy the right full canvas suit, which means that there in a suit jacket, there's a floating canvas for a nice suit. And for a cheap suit, it would be fused and it's really not going to provide you a good drape. But for a full canvas floating suit, that's actually going to bend and mold to your body, and that's going to give you the best drape, and that's what you want. So that's another caveat. You want a full canvas if you can get it. But anyhow, the point is if you only wear suits a few times a week, two suits is plenty. If you wear a suit every day, then four suits is great. And then depending on where you are, right, whether you're going to stop at two or stop at four, then it's time to transition to the business casual or the real sartorial look, as we like to say. And this is
Before we
where
segue, before we segue in that, can I stop just on ties and items of that nature? When it comes to ties and everything like that, I think we need to just be very conscientious of the color because certain colors don't go right, certain shades don't go right. I typically like to wear a white dress shirt or blue. That's the only thing I will wear, but a pink might be falling to the mix, or an ecru, which is like an off-white cream color. Here is one of the ties I also got, though. This is a nice burgundy tie from Suit Supply. Here's the color. This will go with basically everything. This is a staple tie. I love this one right here. Very nice. It's not going to break your bank. Elegant, tasteful. No one's going to be offended to see this tie. It's not the most exciting tie you've seen, but you'd rather be on this end of the spectrum versus having something totally wild and out there and
Well,
frankly tacky.
I think it's important that that tie that you just showed doesn't have ice skating penguins on it. Like,
Or
what
Santa on it, or
what are we
Snoopy.
talking? What are we
Yeah.
doing here, right? You're the pattern of the tie shouldn't be visible from 6 feet away. If you're going to have a small pattern, like this tie here has a
So
small,
elegant. Is that an Hermes?
it is an Hermes tie. So you can see it has the tiny H's, but
You're a little bit muffled. You're right there.
oh, sorry. But even from a few feet away, it just looks like a solid tie. So really sticking with the solids, the basics, a tie, the hard and fast rule is that the tie should always be darker than the shirt you're wearing. So with a white shirt, you can't lose. Everything's going to be darker than white, obviously. So it's no problem. But that's the typical rule. You don't want so it's actually funny. Let me break this down real quick. When it comes to suits, the darker, the more formal. The lighter, the more casual. When it comes to shirts, it's the opposite. The lighter, more formal, the darker, more casual. So white is the most formal shirt you can wear. I really do truly think that a man cannot look better than in a white dress shirt. And so therefore, it's a very rare occasion when you see me not in a white dress shirt. I pretty much only wear white dress shirts. I just own 4 white shirts and I wear them every single day. So that makes my life very easy, and I don't think that it's possible for me to look better than that. And then let
Moreover,
me also finish when it comes to ties, we go back to the suit rule, which is for ties, darker, more formal, lighter, more casual.
so here is also my second tie, back to something with a pattern. Dark green tie here, very, very small. You'll note some flowers there. This is one of my favorite ties. Similarly, also from Suit Supply as well. They have a very small, is my audio okay, by the way?
Yeah.
They have a very small inventory of ties, which is actually nice. Confused Mind says no, less is more. But here is an example of something that I love here. Little patterns. If this was on me, you couldn't even tell really. You know, there's something going on here. Bad lighting there, but you wouldn't be able necessarily to tell if there was a pattern there. But it's very elegant. It's understated. This is not going to clash too hard. This would really go nicely with a charcoal or a navy suit. So this is very versatile in that respect. This could go with everything. And then on top of that, this will probably segue into the sartorial and side, and the more casual side is now I got some pocket squares, which I had not done before. So this white one could go with anything. If you're wearing a suit, I think you mentioned that the only pocket square you'd want to go with a suit, not a sports coat, is in fact a white pocket square. So this coupled together would go nicely, or the other look. And then this will be more for when I got a sport coat going on. This is a burgundy. This could mean maybe if I wanted to go crazy, I could match these two together, although I couldn't go with the green and the other. If this is fringe, it could go together. If you're, perspicacious like me, maybe you can make it happen. Or like yourself, but this is something I want to go with. These are very nice, timeless, classic looks, and that's what you want to go for. And that's what Suit Supply does capture so well, is the modern, sleek fit that's not too in your face and too skinny, but is also a very classic, timeless look. So it's combining two of the most important elements into their manufacturing process.
Yep. Well said. Yeah. Pocket squares are a very fun element. I'd love to share and show off some of my pocket squares on a future episode. That would be really fun. But yeah, like you said, that's a great segue to the sartorial conversation where now you're getting into wearing a suit for fun, not because you have to. So at the end of the day, wearing a suit and tie, you look fantastic, you look elegant, but the reality is you look like you're going into the office. And while you look like a gentleman, you look fantastic, and the beauty of it too, also just for a quick aside, for those of you that aren't into all this stuff yet, is the way that this makes you feel. It's transformative the way that it makes you feel, but more importantly than the way it makes you feel is how it makes others feel. But really, the thing I'm reaching for here is you need to pay other people the respect of looking good. If I'm not looking good, and I'm just asking people to do business with me, I'm not respecting them. And so I need to respect myself before I respect others. And that is one of the foundational elements for why we emphasize looking good and looking our best and taking ourselves seriously. Because if we're not taking ourselves seriously, if we're not going through the effort to look our best, how in the world can we expect to receive the same respect from other people?
Without a doubt. And I have a baby face. I'm not
Yeah,
afraid to say it, but I have a baby face.
we're young, baby face.
And I'm also going to audit myself here. My old hair and setup was cringe. It was not a good look. I think about this from a year ago to today, how much more professional I am. I'm obviously more well versed in this space and field, but I maybe wouldn't have taken myself seriously if I met me a year ago. But now, with my improvements to my wardrobe, with my more uh, reasonable,
Professional.
professional, private equity look, I feel like I, command more respect and probably will be taken more seriously because of that. And it's funny. I let some of my friends know as we always share what's going on when we have a level ups and we're excited about. Spent a lot of money at Suit Supply acquiring these new looks. I also got a pair of double monk shoes, which is really cool that you approved of that are will go nicely with the belt that you donated to me. I don't know how a belt would fit you and also me, considering our waist size, but that's the topic for another day, of course, as it pertains to our physical structures, if you will, our vessels, our avatars. But at any rate, I spend a hefty amount of money on upgrading my suit, but it was so funny. Our friend goes, "Yeah, it's not expensive to look good, or it's expensive to look nice. It's costly." But my thought was, it's actually in our space more expensive to not look good. It's more expensive to not be taken seriously, to not get the benefit of the doubt, because people who have higher end jobs and are in, higher walks of life, if you will be able to sell your suit. And, if you've never met someone, all you can do is kind of judge a book by its cover. We're always doing it. If you look at someone up and down and they don't take themselves seriously, if they've got stains, if they've got kind of an antiquated look with regards to their attire and dress, well, you may not get the benefit of the doubt and you may not realize it. But I do feel as if I have my suit on, it's like my superhero, Superman, superhero cape, whatever, my outfit. It will give me the benefit of the doubt to hopefully get the result I'm looking for.
Yeah, yeah, really good. So anyway, that is a bit of a digression, but I think it was a worthy one where we really kind of take a step back and talk about the mindset behind all of this. But getting into where I was going with that is when you're in a suit and tie, you do look fantastic. You feel really good, but you look like you're going into the office, not like you own the office. And there's a different level of swagger and competency when you're dressed to impress, but not in a rank and file suit. So when you lose the tie, you open up the shirt, you are wearing some this all can still be conservative. You're wearing some nice trousers, but now you've got a more fun, cool sport coat paired with a very cool pocket square, which gives a pop of color and character and personality. You're saying, hey, I'm wearing this not because I have to. No boss is telling me to wear this. I'm wearing this because I want to and I look good. And that's a completely different level to the game, which is frankly much more difficult because when we're talking about a suit, the definition of a suit is simply just a jacket and pants that are cut from the same cloth. So it's very hard to miss. Wearing a suit every day, people ask, oh, wow, is that a lot of work or do you get tired of it? This is the easiest thing I can do in my life. It's so easy to put on a suit and tie every day. I don't have to think. When you level up,
Actually, yeah.
yeah, let me just say, when you level up to wearing a sport coat and trousers, it's so difficult because now you're thinking, okay, well, if I'm going to wear my medium charcoal trousers, I'm going to pair it with my royal blue sport coat. Now, what pocket square am I going to wear? Am I going to wear these loafers? It's much more difficult, but that's where the reward is as well because people recognize, oh wow, that is a well dressed, that's a thought out outfit. That's a well dressed man.
Very funny because I think about this. It would be more difficult to figure out office attire and dress code and to do that actually in a situation where there's a little bit more of an open to interpretation setup, a little bit more of a gray area almost, if you will. Because for me, it's very simple: suit, tie, dress shirt, straightforward. But if it was, oh yeah, work casual, smart casual, now there's a billion different iterations. Are jeans okay? Jeans not okay? Are those pants too tight? Are they too loose? Is it too trendy? Is it blah, 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 blah? It's a lot more open to interpretation. And I actually think that the women at a company have a harder time to figure out what to wear and what not to wear because there's a little bit more of ambiguity. But for us, it's very clear, very cut, very, very dry in that sense. However, the other side of it, which makes this side, the more sport coat trouser out more difficult because there's not as much of a blueprint there. And just frankly, for Lone Star, you can't wear a blue suit at Lone Star. I believe it's navy and charcoal are what you're allowed to wear, period. There's no silver, there's no gray even. It's basically a couple of palettes and pinstripe maybe here and there, but that's it, which makes it very easy. On the sport coat end of the spectrum, the world is your oyster, which makes it a little more difficult to have no set box around what you're doing, right?
Yeah. So I'm looking forward to the day where you and I are somewhere out and about where it's warmer weather and it makes sense to be dressed a bit more casually, and then we can,
We got something cool on our wrist.
yeah, we can unveil our more business casual attire with some of our investors and partners. So looking forward to that day where we're sitting and doing business by the beach and I'm wearing my Super 180 cream jacket. Once you feel this thing, you have not felt a lighter and smoother jacket. It's incredible. Super 180, that's something that we can talk about another day. But for those of you that know fabrics, Super 180 is extremely fine. That's not something that you're wearing to the office. So anyhow,
What's your
we,
thread count?
we won't give up. We won't give up all the goods on this one. So we'll save the full breakdown of sport coats and trousers for another day. But best believe that I'm feeding you my best advice after years in the trenches of mistakes and hard work. And you're going to be looking very good very soon.
Yeah, Rob, just for full transparency, got peppered, and I mean peppered by phone calls by me, which was at about 9 p.m. his time when I was calling him, maybe 8, 9 p.m. because I was at Suit Supply looking to make the right acquisitions to fully build out my starting rotation and lineup in regards to my suits and ties. It went very nicely. So thank you for your help and the thousands of dollars in time you spent to research this topic, become an absolute expert in it to allow me to make the right choices to represent Lone Star and myself at the highest level. And then next level of it, of course, now that I have that side shored up, I need to work on the more casual and harder part of my wardrobe in the second level to it, which is the sport coat, more casual, fun, Miami-esque look, if you will. High-end Scottsdale look, Dallas look, broker look. You want to look swag going, walking around New York City look with regards to your outfit there. So very fun stuff there. It's cool. It's an investment. You have to look at this as, investment back into yourself. It is important. It's a point of emphasis that I've made for myself this year that I'm looking to work on. And I feel very lucky to have a great tutor there. And hey, listen, if you have a question about what you should or shouldn't get, if you are younger, listen to this podcast. There's actually a quite amount of younger people that have been DMing me, looking for advice and whatnot. Very flattered and appreciative. If you have questions and looking for guidance for your wardrobe, reach out to me, email me, and be able to put you in the right direction to make sure that you look good. The last thing I'd ever want to have is you not to get a job if you're younger based upon your outfit not looking exactly right. I don't think people will hold it entirely against you as an employer, but we want to feel confident. We want to feel good about ourselves. We live life once, feel good, look good, play good. So with that said, thank you so much for listening to episode 31 of the Capital Spotlight podcast. We will see you next week.